Felix at the team.
Ladies and gentlemen, welcome back. Chart Talk 80s and 90s in the building. The video production people are killing us to say, like, subscribe at the beginning of these videos. So that's what I'm doing right now, making some people happy. Whatever you got to do. Let's jump right into the market outlook. Market's pretty hot right now. Let's get into it. I mean, we're just seeing the market grind up. Here's the S&P. 1, 2, 3, 4, 5, 6 pretty much green days into new all-time highs. We head over to tech. We see tech breaking out to new highs with Qs. And even, the IWM, the small caps, they're sitting within this macro pattern. But, it's a gorgeous pattern. It's an absolute gorgeous continuation bull flag pattern. So, I mean, if that can matriculate to the upside, we'll see some small caps running, which are, of course, the more fun names that we love to trade, things like that. So, things are pretty looking pretty good across the market right now. We're seeing a lot of rotation back into those tech and growth stocks, which has been a ton of fun for us. What are you thinking over there, Ben?
So again, you mentioned all the good things. I'm going to mention the one sector to avoid. So again, Shake mentioned all the good things. I'm going to bring in a little bit of the bad. The one sector I would try to avoid is going to be the material sector. VAW is an ETF that we follow that tracks the material sector. Think of stocks like DD, Dow, PPG, names like that. You can see very broadly, you see that orange line, that's the overall uptrend that the sector has been on. Again, it had done very well when tech and some of the other sectors had been a little weak, a few months past, but now it's starting to lose a little bit of steam. We're starting to see, after the uptrend broke, an H pattern forming, which typically is a bearish pattern that you tend to see lower prices in time. So this will be a sector to avoid for the time being.
Nice.
All right, Jake. So with that, you want to jump into some of the top ideas?
Oh, I do. What do you got for me?
All right. So the first one is this UPST, Upstart.
Ooh, yeah. I'll talk about this one. A good trade, bad trade too. I mean, this one's just sitting here at support. It's trying to go. It's such a sneakily wide name. Like, you look at these candles, they look pretty small. And, high to low, this name is $14 a couple days ago. So, I mean, it's just a very, very wide name. You have to treat it as such. I'll talk about a good trade, bad trade, how I wasn't doing that, and I kind of fell into some trouble. But this one still looks great. It's still working on the support area, holding this support trend line here, 118, 115 area. So it's a big area, and it's such a wide name that, if you want to win in this name, you got to give it some room.
Mm-hmm.
Where we go from here?
Next is this GH.
Ooh, GH back. Ooh, yeah. Nice little flag right before nice little mini base. Flag right under this 130. Ooh, I like that one.
Our next will be a front door, FTDR.
Nice. Oh, yeah, that one looks really good. Kind of ignited today. Was that Volume Friday? Wow, sick Volume Friday. But yeah, it looks like you got to enter through today's highs, that 5110 mark. You got to give it some room. This is more of a macro swing trade, but this one looks pretty good. The way it tried to break down and held this massive support area right in the 200 day, looking good.
One that didn't go today, but still looking pretty tight, is this IAC.
Oh yeah. 155 right there. Just beautiful consolidation right at support, holding this macro trend line. Looks like it wants to push higher to the top end of this range, and then who knows from there. Definitely one I'm interested in tomorrow, 155.
Next up we have this CME.
Yeah, that one needs some time. Big macro level we see here under this 220. I think the more consolidation we get below this 220, the better it's going to be. I don't think it's ready for a few weeks, but definitely one to keep an eye on.
All right, one more. This KNTE.
Nice. Oh yeah, recent IPO.
Mm-hmm.
Yeah, this one's just okay because it's just kind of been in a downtrend its whole career. So it's definitely not at the top of the list. We're not seeing the demand there. However, if we do see volume through this 26 area, it could definitely bounce pretty hard. So that's what we're looking for to that name. But very thin, not at the top of the board. I got a couple I want to go through.
Mm-hmm.
I really like this DHI tomorrow. So I grabbed a feeler at Friday, this against 88. It's just so tight, holding this trend line. I think we can buy through this 90 area tomorrow against this 88, and it just looks like such great risk reward. If you draw this little trend line right here, it looks like it could really break through back to these highs. And if you can get in on $2 risk, that's a really good setup right there.
I like it. What else you got?
And last one was big, BIG. Anything else? BIG, had this huge day a few days ago. The buyers let it pull in, and now if we see it push up through this 6650 against the 64 area, that looks really solid. And then how can we forget our buddy HZNP? Didn't break out like we wanted it to. But, this macro pattern has to be watched. Looks like, if you want to win in this name, you got to give it the proper room because it's kind of messing around at this breakout level. So, but definitely keep an eye on that one as well.
All right, I got a few. First one is this PHM up through this 55 area. This is actually a name that we were swinging up through 50. We were in for quite some time. I actually got stopped out down through 55. But we can see now it's just kind of basing a little bit up through 55 versus 52. So when I'm keeping one on the radar for a move again back to that 64 area. Len is another one up through 100 versus 95. Flagging a little bit. And let's see, next up this ODFL. Close to the trigger, but again, another one, tight little name versus 250 up through this 256 area. Again, that's looking to take that move back up to that prior high, back to 275. APH, another one we've been watching for quite some time through that 69 versus 65 for now, that blue sky breakout. And then last but not least is this NOC flagging up through this 380. Definitely going to need some time on this one versus 360, but definitely want to keep on the radar.
Ooh, I got some tough news for you, Benagram.
What's that?
I'm still in this NOC when it was trade of the week at 306 or 307 because I hold my winners, Bennett. All right.
You do. Buying up to the base. I love it.
Well, my goal in this one, it was the same as like UPS, where I just it's a name, pays a dividend. If I can be in this name, I'm up 30-40% in it, and just end up holding it forever. That's the goal I have for this NOC. So just treating it super wide. Just trying to be in the name forever. Simple as that.
Yeah, I'm still in UPS with you.
Nice, love it.
All right, so we went over some of the top ideas. I do have one question. This was from a few weeks back when you caught all those secondary offerings in Playboy, and I can't think of the other stock. If you want to go over a brief little summary / lesson, if you have one, on secondaries.
Yeah, so I mean, a secondary offering is very simply, a company is looking to raise money. They have debt or whatever it may be, so they issue more stock. They issue more liquidity, and in order to simply raise money, more supply, but it's going to equal less demand. Stock price is theoretically going to go down. Now, do you get lucky sometimes and these names get bought up? Absolutely. So here's what happened with the Playboy. So we were in this thing through these inside day highs. We caught this move. We did sell a lot, but the secondary came this following day. You see how we closed here at 53. They announced the secondary. We open up at like 47-ish, and it rips the whole day. So we do get a chance to take some more off into this pop. And really, that's what we wanted to see. It's like we gave it the 15-minute rule where, of course, you wait the first 15 minutes to put in a stop, let it put in that low, that reactionary low where buyers are going to puke out their stock, and then usually the stock rips up. We saw that great buying on the first day they announced that secondary. We did get to sell a bunch at the 52, 53, 54, but what they do, the stock was trading so well, they announced they upped their secondary this day and almost gave us 2 secondaries in 1 week, and then we had to give a lot of profit back. But lesson learned here was if you get stuck in a secondary, you do get that pop back. You just got to take profit. That's the lesson learned. We should have been taking much more off in this 55 area, this resistance area, even though things were going so well, because the trade had fundamentally changed. When we were buying this thing, there's a certain amount of liquidity. A couple of days later, there's a lot more liquidity, so there's going to be a lot more sellers in the name. So the trade is theoretically changing in that sense. So, lesson learned here, you get a secondary, you get a pop on the secondary, you take profit. It's really simple as that for me. And what was the other one? Leslie? Yeah, two in the same day. Unbelievable. I've never had 2 in the same year before. I had 2 in the same day. But same sort of thing. This day was the secondary. We were trading this name through highs, and we just got trapped in the secondary. There's nothing you do. There's no way you could see this coming. It's all inside information if you do see it coming. So whatever it is, it's a part of the game. But definitely sucks. But you just gotta know how to handle getting out of the stock if you do get caught in one.
Mm-hmm. All right, Jake. So with that, you want to get into some good trade, bad trade?
Yeah, I actually have a decent chunk. Let me whip them out. All right, so I'll start with the bad. This UPST. So we see this base. All right, here's the daily, and you can see I'm just trading it really wide. But I was never giving it to this bottom 115 because I wanted to load up on stock. I wanted to have a huge position, and the reason I entered the trade that first day was this day right here. when it was reclaiming the 8-day for the first time. So I was only using a stop at lows, but I had an incredible entry. This name, again, this day it went up and down $14. I was able to buy 122 versus 119, $3 risk, in a name that can move $15 a day. That's a great entry. So how I traded it, and then I took an L in it again today, and I'll talk about the mistakes. But so here's the first day. I was buying it as it reclaimed the 8-day. I added that second day. And then I did kick a third, 3-1. It comes in, it holds the area, and I get stopped out of that stock. So it turned to a slight loss, nothing crazy. And then today it gives us a great open. I bought some and then got stopped out at lows, knowing, and I knew the whole time that I had to give it to 115. So if I'm using this intraday low, I'm trying to get lucky. It's a very low probability trade right there. But, when I can make it happen, it's such a great risk reward. So that's kind of the positive and the negative of it. And then the flip side of it is I'll talk about this path. So this is the daily chart of this path. This was trade of the week this week. We're in this one today. I'm pretty large in this one. So I'll tell you how I traded it. So we see the 67 area is support. All right, then Thursday, I see the buyers step up to 68. So I buy a very small amount. The next day, it comes down. The buyers hold that 68 again. That's where I start buying a lot more. And then it closed so well. I was able to have a pretty big position coming to today. So then it triggered perfectly today. Triggered absolutely perfectly today. Look at this volume. Like cataclysmic volume. That's insane. It had a 2 million share 15-minute bar where it did like 2 million shares Friday, So that just shows you the change that we saw in the stock. That was the reason we loaded up. So I added through the trigger. I was able to kick 72, just under 73. Comes back, retests at 70, and I was able to re-add. So it looks re-add that stock that I kicked. So I have a big old position. I'm still giving it to this 68 area. It didn't close as well as we would have liked, but it still looks really good. When something gives you that volume, you have to stick with it because you just have to have the confidence that the buyers are going to come back. And then I got a few swing trades working. Here was this match from last week. That was really nice. We bought this like 144 versus 142. So then it has this macro level at 160. It kind of reversed in front of this level, and I took some off. And they got me out of some good stock there. But I was at 5-1, so I can't really be mad. 5-1 risk reward. So I can't really be mad that I took profit in that area. It was going straight up into resistance. It found some selling. That's a name that likely pulls back. It didn't, and it went higher. But if I'm at 5-1, a name's running straight up into resistance, I'm taking profit. That's very simple. I'm okay with missing out on some gains. And then, what was the other one? American Eagle, AEO. Oh shit! God. Shouts out to my 15-year-old self. Yeah, I would love this. 30. We bought 35 versus 34. It was a breakout. Had the volume. We're kicking some before this 37. Then it retested these highs and reversed once again. And this went straight up into resistance. Now talking about that match trade, I took a lot of profit off in this 38.50, right below this 38.50 area, which is what I thought was going to be happening with that match. And then I got fully out of it today. I just took my profit. It can go higher in time, but it gave me a really, really great 4-day move. So I ended up like 3-1 on the trade. So no qualms with that one. Good trade. But that's really all I got. What you got over there?
All right. So first one is this DD. So again, earlier we mentioned trying to avoid materials. DD kind of fell in with that, and this was a trade that going into it either looked great up through 78 versus 76, and it also looked like a great short down through 76 versus 78. So this one I got triggered in on Friday, put us up in verse 76, and basically got chooken out today. Again, looking at it now, the proper pivot probably was verse 74, giving it probably a little bit more room. But again, it never was initially right. From the moment I got in this stock, I was immediately wrong. My buy stop was 78.05. The high of the day was 78.13. So I was, immediately just wrong in the name. So to say I should have given it verse 74, I'd rather just take the $2 loss and move on with it.
I'm with you. I think if you gave that to 74 and you bought 78 and you're never in the money.
It's like awful. It just...
that's tough mentally to take that.
Yeah, it's like...
I think you made the right move there.
Yeah, it's like just, again, the idea there was... Again, there's no conviction. It's like it's either a great buy, up off support, or it's an amazing short down through lows. So again, wasn't really what I would call like an A+ setup, but just kind of one that looked like a kind of low risk trade worth taking. Just didn't work. So I'll take the loss on that one. The bigger thing I've been kind of doing these last couple of days was selling some Amazon and some Shopify. So Shake, if you want to pull up the next chart.
I got Amazon.
All right, so now this...
I'm trying to buy this Amazon pullback when it comes to the 3,300.
Yeah. No, I mean, I think it looks great longer term as well, but this is more for the guys with M1 and when we talk about rebalancing. So again, for this
By the way, sick entry on this.
Yeah. So this whole example is for these 3 trades kind of combined: Amazon, Shopify, and Etsy. I have all these names in M1. I have about 10 names in my Roth as well as my SEP, and I continuously add to the SEP. I can't contribute to the Roth, but as I can add to the SEP, I continue to buy these names, and when they get extended, I'll start to take some profits and lower the allocation when they get extended. So Amazon was a great example. We were adding to Amazon for quite some time. We had this really nice move back to these all-time highs, but it just got there too quick, too fast, and it just wasn't really expecting this breakout. So for me, it was time to lower that allocation. So say I had a 10% allocation in Amazon, it was lowering it down to 7%. So selling some, taking the proceeds, and then moving it to Etsy. So this one I was taking some profits in. Next one was Shopify. Yep.
Got it.
And this was really more the one that started or initiated my thought to start taking some profits in these 2 names and moving it elsewhere. And more for Shopify was that it's up basically 50% in a month. Amazon was only up about 10 or 15% from the entry. Wasn't up too much, but for Shopify, it was up almost 50% this month, and you kind of have to expect to take some profits in this name. So Shopify, again, retested the prior all-time high. Again, pushed through it a little bit as new traders tend to chase that prior high, but they don't really have much momentum to push it through. So that's where I took, again, lowered the allocation in Shopify, lowered the allocation in Amazon, and rotated those proceeds back into Etsy, which was a name that we were keeping an eye on. Shake, if you want to scroll over to Etsy.
Etsy's ripping, God.
Yeah, so we saw, so again, in Amazon and Shopify, both those names were getting up near resistance, major resistance. Shop was retesting their prior high. Amazon was getting up to their prior all-time high for the 3rd or 4th time. And Etsy was near support. So in those 2 names, I was lowering the allocation, realizing some profits, and taking the proceeds and putting them back to work in Etsy. That was closer to support. And now in Etsy, if it continues the trend that it's been on and it can work its way back up to the 240, 250 area, I'll repeat that same thing I was doing with Shopify. I'll start to take some of the proceeds out of Etsy, and I'll see what is setting up in the basket of stocks that I have in my SEP, my Roth, and I'll reallocate those funds to the next name. So I'm constantly trying to buy up off of support, selling into those major areas of resistance, and I'm locking in profits and taking the proceeds and putting them back into the names that are setting up closer to support. And that's the game of rebalancing that we want to get into when we're using, services like M1. So those were a few of my main trades for the past week.
Good shit.
Yeah. So other than that, Shake, we can get into book of the week if you'd like.
Oh God. My life's crazy trying to live between New York and Denver right now, Bennett.
Get the violin out.
Oh, boo-hoo! Let me play a sad song for you on the world's smallest violin.
But okay, so I have a good.
I can't handle these 2 houses. I can't handle it.
Yeah, really tough first world problems.
I know.
So the book that I'm reading or I finished was The Terminal List. Has absolutely nothing to do with the market. Absolutely nothing to do with education. One of the members put me onto this. I can't remember who it was, but I do want to thank you because this was it's like a military type of thriller. The guy gets kind of set up and has a lot of crazy stuff happens, but it's an amazing book.
They're making a movie.
Are they really?
Yeah. It's starring what's the guy's name? Chris Pratt.
Okay. All right. Well,
I just have it up right now.
I'm definitely gonna watch
it
the day it comes out. But honestly, this book, it's could not put it down. Again, for the week ago, we were down in LBI with some of the members. I was there a day or two early, and I pretty much sat with this book for the whole 2 days and just read it nonstop. Because whoever wrote this wrote it very well. So if you need a book to get away from the education books, and you need kind of a fun, exciting read, The Terminal List was definitely one that kept you on the edge of your seat for the 400 some odd pages. All right, Shake. So if you got no book,
I'm a bum. I'm a bum this week.
I think we're done.
All right, good stuff. Again, like, subscribe, all that jazz. Give us a couple questions in the comments. Whatever you want to hear. We're here for you guys. All right, with that, we are out. See you guys next week.